The broadcast is now starting. All attendees are in listen-only mode.
All right, good afternoon, everyone. Today it's June 13th, and it's about 1:45 Chicago time. And this is going to be another episode of CFRN Thursday, where we go over the CFRN trade setup, but in slow motion. The platform that I'm featuring is the DtPro platform, which is the same platform that Michael and Dwayne use inside the training room. What you're seeing in front of you is the CFRN indicator set inside the platform. And with a few right clicks, you really can just install and add them to any kind of chart that you want. All right. The goal and the objective of the webinar this afternoon is, one, for those guys that are brand new, that are thinking about going down the CFRN path, this will be a good cheat sheet for you to lean on, or a syllabus to look back on. The webinars are recorded. They're in YouTube, and you can go back and review them. So you should have a good, your eyes should be wide open at the end of your trial. Okay, so at some point during the trial, you're going to get an offering from CFRN. Let's just say if you want to be a member, here's what it takes to be a member. At least by the end of that week or that trial session, at least your eyes are wide open, and that's the goal. Okay. And you know what? When you go inside the training room on day one, man, things are happening, and they're happening fast. And this will allow you to absorb what's going on. I'm going to go over the setup, like I said, in slow motion. I'll break down what the setup is, some of the buzzwords that you'll hear in the training room. So when Michael is training and talking about the different setups and how he's getting in and how he's entering and how he's exiting and how he's managing trades, again, you'll be equipped maybe to absorb a little bit more than if you weren't here today. So it's going to give you an edge, definitely, during your trial. Okay. A lot of occurring. A lot of members, active members, pop in here every Thursday. You guys, I'm glad to see you guys in here. Again, this is going to give you a chance to be in front of the screens, in front of the markets, getting to know the personalities of the markets that you're trading. It's going to allow you to ask questions. And, if you're still on the sidelines and you're working your way up to trading live, this is going to help you build some confidence. Okay. So, again, if you are a CFRN member and if you have questions, fire away. Okay. It's fair game. I've been in the CFRN training room from day one. I'm in the background. I don't say too much unless Michael steps away and I see a question or I see something happening. But I know the setup. I can teach the setup. And if you have questions, I certainly can answer them. So what I'll look for this afternoon is more of the easy and obvious trade setups. Okay, the ones that don't require a lot of filtering. Okay, we're looking for stuff that fit, the 4 rules. And I'm gonna pop inside the DOM. That's this tower here. In fact, get the highlight. This is where we do all our buying and selling, and that's where you'll see Michael do the same. Okay, if we end up getting a signal to go long, we're going to left click in the green. If we get a signal to get short, well, we're going to left click in the red. Okay, and that's kind of how we make our money. And I'm going to show you some tricks on how to play stop losses and how to trail it and stuff like that. So we'll do everything from start to finish. And like I said, hopefully, if you're brand new, this is going to give you an eyes wide open approach to what's happening. And if you are a recurring CFRN member, this is just going to give you more screen time. So it's a plus for everyone. And it really is in the best interest for me, especially if you're doing business with me, to teach you the right way. get you started on the right path. Because if you do well, obviously I'm going to do well. So that's why when there was a demand for, hey, can you slow this down? Can you slow this down? I did raise my hand and say, you know what, this is a good opportunity to, share some of my knowledge after 8 years of doing this with CFRN. So again, that's the goal and the objectives of the webinar this morning or this afternoon. But before I present, I do have to go over some of the disclaimers. Okay, so again, I can just throw them up and say, hey, take a look, and put them back down. I'll take a few minutes to go over them. So because we do get some rookies that are brand spanking new to our space, which is trading futures, and basically this disclaimer is really meant for them, the guys that are brand new, because what this says, because look, you guys get emails and stuff like that, like I do, that some of these guys are promising this and that and that and this, and everything is easy, and how simple is that? It's not. Trading isn't simple. It's hard. So that's why we have to talk about disclaimers. So the bottom line is this, and I know this isn't a good way to start a webinar, but again, this is an eyes wide open approach to the CFRN workshops. The idea is this: you can lose everything in your trading account and some if you don't have stop losses, if you don't have a trading plan, if you're not in front of the screens, you're not engaged in the market, you're not, you turn your back to your trading account or any news items. Again, if you ignore those facts, this disclaimer is going to hit you right smack dab in the face. I've been doing this for 25 years, so I've really have seen the good, the bad, and ugly when it comes to trading. So that's why I don't take this lightly. The good thing is, if you decide to go down the CFRN path, and what we're gonna comb over this afternoon, actually you have a trading plan, right? There's basically 4 rules. Okay, every trade does have a 8-tick stop loss attached to it, right? So that's good. You're going to be on a 4-tick range, right? So you're going to have to be in front of the screens and engaged in what's going on in the marketplace. Okay, not only when you get into a trade, but you have to. There's some rules in managing the trade from start to finish, right? So you're going to have to be in front of the market. You'll have to be in front of the screen. You'll have to be engaged in the marketplace, and you're going to be in front of the DOM here, this tower where we do our buying and selling. All right. So I scared you with the disclaimer, okay, and for good reason. It's out there for a reason. But if you go down the CFRN path, we'll check a lot of those boxes off, so you don't become a casualty of this disclaimer. Okay. Now, in the end, if you do all the right things, all the things that I just talked about, in the end, if you do have a stop loss in place and you're in front of the markets, you're in front of the screens, and you're in front of the tower, and you're doing all those things, and a crazy tweet does come out, and the market goes into a tailspin, or there's a big spike up, there is the risk of your stop loss not getting executed. What does that mean to you? That means at some point you could potentially have unlimited risk on the table if that happens. Okay, now you're scaring me. Yeah, I am. The good thing is, probably over that 25-year period, I've only maybe seen it a handful of times. It was more so when we didn't have electronic trading. It was more sensitive to when the pit was open outcry. I don't see it as often electronically, but it does happen. The good thing is this: if it does, the black swan event happens, the worst case scenario hits you right in the face. Look, you're in front of the trading platform, right? If you hit this exit at market and cancel button here, this will get you out of your position. It'll cancel all your outstanding orders, and get you flat. So you can take a breath and say, what the heck just happened? Okay. So again, those are the worst case scenarios. Is that the way to start a webinar? No, but I am talking about disclaimers before I present, and we really shouldn't ignore that stuff. A lot of people don't even know that. That could be a possibility. So it's nice to talk about. Sorry. The other thing is that the funds that you put in a trading account should be risk capital. Should be money that you can afford to lose. It's not going to trade your lifestyle. If whatever happens, you blow through it, frankly. So you have to strongly consider that before entering into our space, or if you're going to decide to trade futures. Okay. That is a scary one. That was the disclaimer number one. Number two is my relationship with CFRN, because CFRN doesn't work for Daniel's Trading. I represent Daniel's Trading. Okay. I don't work for CFRN. Okay. There is a line in between us. Okay. And so that's why we talk about it. I support the platform. The platform that I'm featuring is DtPro. Same one that Mike and Dwayne use. Okay. Their indicators are built inside the trading platform. Okay. So if you decide to take a trial, you'll probably hear from me. If you decide, hey, I'm gonna take the trial, I'm gonna use DtPro. If you have problems with downloading the platforms, downloading the indicators, if you have questions about trade setups, you would contact me directly at the desk. That's a good thing about working with me. Excuse me. Is that you actually could talk to a live body if you have a question. You don't have to exchange emails and hope someone's reading it and knows what you're talking about. I'm in the room every single day, so I know the stuff. I know the platform. So if you need some hand holding, just call the desk, and I'm going to be the guy that picks up. Okay, so that's a big advantage. Okay, especially if you're learning something new. Okay. Down the road, if you decide, hey, I'm gonna go down the CFRN path, and at some point you're gonna have to open up a trading account. So I handle all the execution and the brokerage and stuff like that. So when it comes to all that good stuff, you'll hear from me too. Okay. If it's something on the CFRN website, like videos, the workshops, getting into the training room, the Thursday night workshops, Logic 247, concierge trade alerts. I think the daily doubles are on there. Okay, if you're not getting any of that stuff, you can just reach out to Val. Val is a great person that's been added to the support team, and she'll get you hooked up. Okay. If you can't get a hold of anyone, just call me at the desk here, and I usually can get a hold of somebody over there. So I'm also a contact person. If you can't get a hold of somebody and you want to talk to somebody over there, just give me a call at the desk, and we can chat, or I could tell Mike or Dwayne, hey, would you give Roger a call? He really needs to talk to somebody. So that's fair game too. But the bottom line is, CFRN, it's their indicators. They're the educator. It's a third-party relationship. It's their trading tools. All right. When it first started, it was just radio. And when I ran into Dwayne about probably 10 years ago, we ran into each other, and he said, hey, come on the radio program. We do something for a few hours every afternoon, and we can talk about markets and answer questions people have and stuff like that. And over the years, what I had found was, a lot of people were just asking Dwayne, show me how you're doing this, show me how you're doing that. And he got together with Michael. Both of them are TradeStation developers. Our platform, DtPro, uses reads easy language, so you can code indicators inside the platform, and so it was kind of perfect timing. So, and we offer a platform that's free, so there's not any additional leasing fees or anything like that to lease the platform. So it fits well. So that is that covers that slide. That's our relationship with CFRN. Okay, so we have to disclose that. So that's it. So we got that stuff out of the way. So next bit is the trade setup. You get that screen in front of me. Now, before I get started, this is live, so my phones might buzz from time to time. I might have to put you on hold, hit mute, and answer questions and stuff like that. So if I put you on hold for a few minutes, don't take offense, because I do have to support some clients that may call and ask for answers, have questions and stuff like that. So, all right, so let's start with the trade setup. First order of business is the time frame. We are on a 4-tick range chart. Okay, a 4-tick range chart. So if you have DtPro up and running, chances are you're on a time-based chart, right? You're probably on an hourly, could be on a daily. If you're following Logic 247, you're probably on a 30-minute chart, right? The bottom line is you want to get to a 4-tick range chart, because that's what Mike's featuring in the training room. Okay, so the way to get there is next to the top left-hand corner of the chart, you'll see let's say the little time-based minutes here. It's a little drop-down box here. If you click on that, this box will open and select custom, but select range bar and make that one look like a 4. Okay, and hit OK. So now you're staring at the S&P minute on a 4-tick range chart. Okay, and one of the first traps that people fall into is they'll do the right thing. They'll hit the drop-down box. They'll hit custom, but they end up selecting tick bar, and they end up making that 2 look like a 4, and the chart looks like this. Obviously, that is wrong. Okay, so if you're staring at something like this, you fell into the first trap, and you need to get it on a range chart. The little R in parentheses is kind of the tip. Okay, that'll let you know, hey, you're on the right chart. And look at how smooth it looks too. A lot different than that other goofy chart I was just showing you. Okay. The reason we're on a 4-tick range chart is because the height of each candle is 4 ticks in height. Okay. Some look smaller, some look larger, but in the end, they're all going to be the same height. Okay. So here's what you'll hear. All right, because this is kind of important. Because Mike's on a 4-tick range chart, he can be a little bit proactive, a little bit predictive. Okay, so what does that mean? That means when all the rules apply, okay, because he knows the height of each candle, you're going to start hearing him call out the highs and the lows of that current candle. Okay, you'll hear him sound off a little bit. Okay, what he's doing is he's preparing himself in placing an order in advance. In other words, if the market's trading here at around 28.92, okay, he has something that says it needs to get long. What he's doing, he's right-clicking. Okay, he's right-clicking in the green and creating a buy stop. Okay, to enter into the market. Okay, or if it gets some kind of a sell signal, he's going to be again right-clicking in the red below the market. All right, so he's creating a sell stop to enter the market. Okay, so if all the rules apply and the market takes off, Okay, he's going to have a resting order in here that gets him into the market. Okay, so if the market blasts off, hey, he's going to be in there taking advantage of it. Conversely, he's going to be doing the same thing on the downside. Okay, if all the rules apply, all right, the market breaks down, he's going to have an order in resting to get him short on the way down if the market starts breaking down. Okay, so that's what he's doing. So you'll hear that in the room. So when you hear that, you should say, that's something that Bert talked about on Thursday. In advance, he's placing orders. Okay, he's getting in on some momentum or weakness. Okay, and I don't think you pick that up on day one or day two. I think it's after a while you become a member, you've hung out a little bit in the room, you get to know what's going on, and then you can draw. Then the questions I see pop up. Hey, how did you get into that? What are the rules on that? So you'll pick it up. I think it's more of, if I were brand new, I wouldn't worry so much about that part of it. I would worry about the rule set and the simplest way of getting in, which is, hey, if it qualifies, hey, left click in the green or left click in the red. Okay, that's the easiest way to do it. Okay, so I won't labor over that. If it does happen in the next hour while we're in here, I'll place the order and I'll show you. Okay, I'll show you a little trick. Okay, so the first order of business is the 4-tick range chart. Okay, that's what that was all about. Okay, now the other thing I'll talk about, and if things get slow and things start rocking and rolling, if you are trading the Dow or the NASDAQ or the mini Russell, some of these markets are really popping on a 4-tick range chart, and it's almost untradeable. What we'll suggest is not go to a 4-tick range, but an 8-tick range. Okay, it's one way to slow it down. Okay, all the same rules apply. Okay, all these rules still apply. The only difference is your risk. Okay, you'll have a larger stop loss, and I'll go over the stop loss setting in a few minutes. Okay, so again, I think if you're excited about, hey, I'm trading the mini Dow or the NASDAQ or the mini Russell, what you might strongly suggest is, look at an 8-tick range instead of the 4-tick range. All right. So for training purposes, we're going to stay on that 4-tick range chart because that's what Mike is doing in the training room in the morning. Okay. Get into some rules here. All right. So if you're brand new, here's your cheat sheet. So we're going to work on the top portion of the chart here. Okay. So here's some buzzwords. The red and blue line is referred to as the MA1. Okay. Green line is called the BBC. That is short for bullish bearish cross. Okay. So together that makes up step number 1, which is this. If the MA1 is red and crossing the BBC, that is a bearish cross. If the MA1 is blue and crossing the BBC, that is a bullish cross. Okay, the one that's highlighted here is a bearish cross. The reason is the MA1 is red. Okay, so if anything's red, we're looking for shorting opportunities. If anything is blue, we're looking for buying opportunities. Okay, now note, I didn't say go long, go short, go long, go short. I said we're looking for buying and shorting opportunities because that really gets us into step number 2, which is this. After you get this cross, the normal thing for the market to do is to pull back to the BBC or that green line. That is what you're looking for, the normal thing. Okay, so you're looking for the market to gravitate and touch the green line, but then you're also looking for a close in the direction of the trend, which is highlighted by that arrow. Okay? If you have a red MA1, which is a bearish cross, then you're looking for a red candle. Okay? That is step number 2. The market gravitating toward the BBC, touching it, and then closing in the direction of the trend. Okay? Now, you're going to run into a scenario like this where the market has so much bullish or bearish momentum, can't get to the BBC. It doesn't get there, and then it just breaks down. Okay? That's fine. Okay? You're going to learn how to deal with that. And when that happens, I'm going to show you what to do. Okay? So you're going to get faced with that. There's some rules for that, and we'll go over that. So we'll cover that. Okay? But the bottom line is you're looking for the normal stuff, okay, which is for the market to pull back to the BBC. All right. Let me share one other tidbit with you, okay, because this is going to lead us into step number 3, okay? Because now our eyes are going to gravitate toward the oscillator portion of the chart, okay? So when we have step 1 in play and step 2 in play, our eyes are going to gravitate toward the slingshot, okay? The slingshot, all right? The little tidbit is this. When everything is the same color, a red MA1 or a bearish cross, a red candle, and a cycle that is also red, when all of them are the same color, that puts all the probabilities, it stacks all the probabilities in your corner, okay? If it starts turning a different color, like blue, it starts watering down the probabilities. What you're staring at right now, let me get rid of all this, is a red MA1 or a bearish cross, a red candle at the BBC, and you're also looking at a red cycle with a nice slope to it. Okay, those are all the active ingredients for a good trade with CFRN. Okay, now I just said this is the cycle. Okay, some more buzzwords. This green line, there's no special word for it. It's just called the green line. But the separation, okay, between the green line and the cycle is the divergence or the separation that Michael is talking about, this area here, okay? Because here's the deal. The trade exists down here in the slingshot, all right? And here's why. You get the marker out here, okay? The cycle is red. It's pointing down, right? So what this is saying is, look, the momentum is bearish, right? The momentum is bearish here. This normal price action to the BBC with the down close associated with this green line pulling away is saying this is just an air pocket in this ongoing downtrend. Okay? That's what it's suggesting. Okay? And when that's present with the divergence, that's it. You have all the steps to get inside the DOM, and the DOM is this tower here. There's nothing left to do but to left click on the DOM and get short. Okay? Because all the ingredients are there. Okay? Once you get into the trade, here's what you expect to happen. You expect this green line inside the slingshot to come all the way down and tackle the cycle as it does here. And in doing so, price action is going to make a new pivot low. It's when these two guys come together is where you exit the trade. That's your exit strategy right there. Okay? This is where you get out. Why? Here's the reason. What we expect to happen is the green line to pull away, get into the cycle. Pull away, get into the cycle. Pull away, get into the cycle until, guess what? The cycle turns blue. What is this suggesting? Bullish momentum, right? Then you're looking for the green line to get underneath it and then create bullish momentum or bullish divergence, okay? Pulling away, getting into the cycle, pulling away, getting into the cycle. So in the end, what you end up doing, selling this top, selling that top, selling that top, buying the stiff and buying the stiff, okay? That's it. That's why it exists down here in the slingshot, right? And basically the last rule is this. Nothing goes into motion, okay, unless we're trending, okay? So if there's one thing that should be on your piece of paper, the first thing, it should be the market has to be trending, period, okay? The market better be making lower lows if we're going short, or if it better be making higher highs if we're getting long. All this doesn't exist unless we're trending, okay? So number one, that statement should be on your piece of paper, okay? And if it's not trending, or when you're in doubt, then you're just going to stay out and do nothing until it looks easy and obvious, okay? So along with the entry, okay, as we went through this thing, okay, again, bearish cross, so we're thinking shorting opportunity, step number one. Normal for the market, what's supposed to happen after the cross, the market's supposed to gravitate toward the BBC, and we're looking for a close in the direction of the trend. Step two, the cycle is red. All right, we have three active ingredients that say, hey, the highest probability is in play here, okay? The green line is pulling away along with this normal price action. Step three is in play, okay? So as I said, there's nothing left to do but to go inside the DOM and push a button and get short. Remember, as I said earlier, every trade will have a stop loss attached to it, okay? And your stop loss is always going to be 8 ticks away, okay? It's the height of 2 candles, okay? So if you are a YM, NASDAQ, mini Russell junkie and you're gonna trade it, well, as I suggested, you may want to be on an 8 tick range chart, so then your stop loss would be 16 ticks away, all right? So just double it up. So again, on a 4 tick range chart, what you're seeing in Michael's training room, stop losses will be 8 ticks away, the height of 2 candles, okay? So if you're brand new, if you're trading gold and crude, you're risking 80 bucks a contract if you're dead wrong. If you're trading the ES, it's closer to 100 bucks. If you're trading maybe the nickel, the mini Dow, that's closer to 40 bucks. Okay, if you're on that 4 tick range chart, every trade has an 8 tick stop attached to it, no matter what. And once you get into the trade, then there's some money management rules that I'll go into as things unfold here this afternoon. Okay, so that's a setup. Okay, from start to finish in slow motion. Okay, and so this is, if you're brand new, this is a good syllabus for you to lean on. Okay, that's it. And some of the buzzwords that you'll hear inside the training room. Okay, so now we are going to apply those same rules, and we'll do it inside a live market, and I'll make some comments and make some points on good habits to get into, things to look out for, some mistakes that people generally make. So I'm gonna point some of that stuff out. So I'm gonna shut this down, get into demo mode. Okay, demo is up here. Okay. All right. So as I said earlier, first thing that we're doing, and the first thing that's on our piece of paper is the market trending? Are we making higher highs or lower lows? So I'm going to start with the indices. So under that first step, another little thing that you should put underneath that, you should put down, Bert said, get in the habit of hitting the zoom out button, this button here. Zoom out, zoom in, okay? Because this will tell you whether or not, this will help tell you whether or not we're trending, okay? So if you hit the zoom out button, we can see what's going on over on the left-hand side, right? You can see more real estate. Sometimes when you're in Mike's training room, okay, charts are blown up pretty good, right? So what you're looking at is a market under a microscope. So this might look like it's trending, okay? But if you take a few minutes to zoom out, you might say, you know what? No, we're just consolidating here, all right? That could be the difference of you being in a winning trade or a losing trade, okay? Just taking a few minutes to zoom out could make the difference. And that is one of the big traps that people fall into, okay? What they end up doing is they start looking at something that's blowing up a little bit and it looks like it might be trending, to end up buying and selling and buying and selling. But if they just took a few minutes to do this, maybe they were stuck inside a larger sideways action and they just got chopped up to pieces, okay? So that's an observation you should write down, okay? Bert said the market should be trending, and he also said get in the habit of hitting the zoom out button, okay? So now we did break down here a little bit, so we have some support, okay? So is it a surprise that we're bouncing? No, it's not a surprise at all. What is a normal thing for the market to do? Well, gravitate toward the BBC or that green line, right? Here's what I want you to do, and another habit to get into, okay? And you'll see Michael do it all the time in the training room, okay? Is after you get the cross, whether it's a bullish or bearish cross, activate your trend line. Okay, this guy right here, activate it, all right? Because as I said earlier, we never know if it's going to get back to the BBC and do the normal thing, okay? We don't. So what you have to do is to get in the habit of drawing a trend line. Because I'll tell you this, if the market can't get to the BBC and it does fail, and it meets all the criteria, man, there's some action to take. And that means you move your mouse over into the DOM and take it, okay? So here's one for example, okay? We draw a trend line because we're expecting a normal thing. We don't know if it'll get to the BBC, right? If it doesn't, and we close below the trend line like we do here, okay, there's a decision to make, okay? Number one, what happened here as the market was trending toward the BBC? The cycle turned color on us, right? So the CFRN members that are in the room, they know the rule, okay? The rule is this, okay? If the cycle turns a different color on us, the trend line is required, okay? You have to draw it. Not only that, you're going to need a close below that trend line, okay? Number two, here's something that's happening right now that we can talk about. This waters the probability down, right? As I said earlier, we would like everything to be the same color, okay? That stacks everything in our favor, right? Okay. So this is a warning flag right here, right? If the line is flat, the cycle is flat, like here, that's cool. If it's turning blue, red, that's fine. Take all the action you want, okay? But if you start curling up at a 45-degree angle, this isn't 45, but if it does, okay, then that is a disqualifier, okay? You will not take action on that. Okay, that's not so easy and obvious on this example, okay? This is flat and barely curling up, okay? But you notice the market did do the normal thing and ultimately gravitated toward the BBC. But this should be a warning flag, right? It's not so easy and obvious, and this is watering down the probabilities, right? So again, we talked about that earlier. It's hitting us right in the face right now, okay? We talked about markets trending, right? Zoom out, zoom out, zoom out, okay? Are we trending? Maybe we're just consolidating here. Maybe we have a larger sideways action, okay? So I don't know. When I'm seeing support here at 28.87 and we bounce pretty good off of it, yeah, I would expect that same kind of action the next time down, all right? So two things hit me in the face here. There was old support here, and I identified that by zooming out, okay? But also, this is turning colors on me, right? Watering down the probabilities. No, it wasn't at a 45-degree angle, but it's present. So that's not so easy and obvious to me, right? So after all that, I wouldn't touch it, okay? So the takeaway there, get in the habit of drawing the trend line, because there's two reasons we're doing it. Number one, okay, if the market can't get to the BBC, we want to be drawing trend lines. So if the market does fail, especially if that cycle is red and we're heading down, there's action to take, okay? But the other reason why we're doing it is if this turns color on us midstream like it did here, then the trend line is required. But you have it already drawn, okay? You have it drawn out. So now you're not fumbling around looking to draw a trend line after the fact. It's there in advance. So if something does happen, again, you're in a position to take action, okay? So right now the ES is choppy. There's nothing to do, okay? We're just consolidating and stretching out the sideways channel, okay? Mark's got a question. Right, the red candle was the close below the trend line. So this is how your trend line should look. Corner of the wick, okay, corner of the body. Do the best you can. This will take practice, and that's why you're on demo mode, or you should be. Okay, that's the candle. That's the trend line. That is the close below the candle. That red candle. Okay, right there. As we get the down close, our eyes gravitate toward the cycle. Uh-oh, it's blue. Bert said, waters down probability. Be on alert. Be on alert. Be careful. Okay. Okay, so there's my phone. So stand by, okay, guys? How the heck do I... Okay, so I'm back. All right, so that's why we get in the habit of drawing some trend lines. Okay, we don't know if it'll get back to the BBC or that if that cycle turns color on us. It's required. Okay. All right, let's move on because crude's rocking and rolling, so maybe we could do something there. And so now we're looking at crude oil. Notice the first thing I do: zoom out, zoom out, zoom out. Are we making some lower lows? Yes, we are. We were consolidating here for a little bit. Okay, we did make that lower low, so it is. I see a little bit of support where we're at now. All right, so I wouldn't short anything right here, right now. But what's good about this? The cycle is red. Okay, so not surprising to, again, to see a bounce after seeing support right here. Okay, but again, it's doing the normal thing, which is pull back to the BBC. Okay, this thing is hopping all around because it's almost 1:30 and the pit's closing. So, you know, we'll look at something that's a little bit more on the turtle track. All right, so here's a good one: natural gas. Okay. Step one: are we trending? Zoom out, zoom out, zoom out. Yeah, we're making some lower lows. Okay. Yeah, I can get excited about that. Okay. Not making a ton of lower lows, but you know, all right, we're starting to make some lower lows. What also sits here is we have the bearish cross, right? That's step number one. The MA1 is red. All right. So we got that going for us. So now we're looking for step number two, which is for the market to gravitate toward the BBC. So what did I just say to do? Activate the trend line. So as it starts coming up and challenging the BBC, okay, we start drawing our trend lines. Okay, so right now it still has some work to do, but we should be on alert status. Okay, with this one. All right, we got that. All right, so, and look, the cycle is turning red now and it's starting to curl over. You know, if the market does come up here, we might get that bearish separation. Okay, that step down here. Okay, that step down here that we're looking for. So this one, it looks pretty juicy. We just need to see a little bit more market action. Okay, let's go to gold because Michael's trading gold a lot. I'm going to do something real quick. There's a reason why I did this. Now, I don't want you to touch anything, okay? But I don't touch your mouse, okay? I just want you to follow along. All right, what the heck did I just do? All right. As I said earlier, the normal thing for the market to do is to do what? Pull back to the BBC. Here's the touch, and here's the close in one candle. This doji lights that match. Okay? The reason why I pushed the button here, because I was able to show you how to enter an order. So what I just did is I left-clicked in the green. That created a long position. Okay, I want the market to go up. That's how I make dough. Okay? What I also did, and what's cool about DtPro, see this little button here when I push it? Bracket option. Notice how the bottom of the DOM opens up and closes. If I activate that, I select sell stop and buy stop, as I do here. I right click over it and go factor in ticks. Factor in ticks. What did I say earlier? Every trade has an 8-tick stop attached to it, right? If I put the number 8 in there as a factor, what that does, it will automatically place a stop loss right behind the trade as soon as I get into it. Okay, it puts it 8 ticks away. So that's one less button to push. All right. So the reason I did that is to show you that's how you get into a trade. Left click in the green, but also to show you the bracket option. Hey, one button. Not only can you enter the trade as at 1346, but it's also going to place a stop loss 8 ticks behind it if it gets filled. It's a pretty cool feature. Okay. Now, the rules of engagement. Okay. How do I manage my trade? Okay, because we didn't talk about that 15 minutes ago. The deal is this. If the market goes plus 4 ticks in your favor, plus 4 ticks, okay? 1, 2, 3, 4. If it goes to 1346.40, okay, we are going to move our stop to break even. How do we do that? Here's what you're going to see happen in the training room. I told you this was our stop loss, right? Okay, what you do is just put your mouse over the number 1, left click over, drag it, and release. It's that simple. Left click over it, keep your finger down on the mouse, drag it, and release. That's it. You're managing your trade from this point on. So every time you move that stop up closer to your entry, you're reducing your risk. You're reducing your risk. Okay? So you don't bring it to break even until it goes plus 4 ticks in your favor. Okay? Which would be 1346.40. Okay? So that's where we're at in the journey. Okay? We're long gold with a stop at 1345.20. All right. So I said, don't touch your mouse. Don't touch your mouse. Okay? The reason was this. Okay? Number 1, are we trending? Yes, we are. We're making some higher highs, right? All right. So we can check that box. Okay, now we just went to plus 4 ticks. The stop is at our entry. Okay? That's right where we went long. That's what I mean by break even. So if it does get stopped out, the most that you're going to give up is the commission. If that makes you feel bad, move it plus 1. Okay? So you don't lose anything, but you still make something on it. Okay? All right, so we are trending. Number 2, I said, hey, when we get a bullish or bearish cross, you better get in the habit of drawing a trend line. Okay? Here's how your trend line should look. It should look like that. Is this a valid trade setup on this close? No, it's not. Why? Because the cycle turned a different color on us, right? So now that watered down the probability on the trade, as I described earlier, right? If it's not all the same color, ideally we want everything to be the same color. That puts the probabilities in our favor, right? But if she starts turning a different color, the trend line is required. A close above the trend line is required before we can take action, right? Has that happened? No, it hasn't. Okay. Is this a close above the trend line right here? No, it's not. We poked our head above it, but we didn't close above it. Okay. Guess what? When that happens, you got to tweak the trend line. Okay. Actually, I stand corrected. You don't, because we actually touched the BBC. So your trend line should look like this. Okay. We still haven't closed above it. The other thing I wanted to point out, more importantly, no matter how this trade works out, and we're flat, by the way, okay? That waters the probability down, right? The red cycle. Notice how it's starting to curl over. Okay, and I said earlier, hey, a 45-degree angle is a disqualifier. Okay, this one is starting to curl over. It may not be quite 45 degrees, but it's enough to say, you know what? It's on the fence. All right. And my advice would be, as I said earlier, don't touch your mouse, don't touch your mouse, because this might lead to some trouble. Okay, so that's why I brought it up. Notice we got long before it even happened. It resulted in a break even. So when you get faced with something like this, number 1, not necessarily good for the home team, but what it suggests is the market's going to consolidate and either break down, because this red cycle is going to start coming down like this, and you'll have what Michael calls it a cycle reset. Okay, Or I might be dead wrong and it just takes off and you got lucky. Okay? When you get this different color like this, especially at a 45-degree angle, the results are usually break-evens if you get in or stop losses. Okay? So this is a big one. This is a big trap that people fall into. They get so hypnotized by what the market's doing. They get anxious, especially like in the indices when it's really breaking. And they're like, man, I need to get short. I need to get short. And they just, their emotions get the best of them, right? We've all been there. They end up kind of falling into that trap. Okay? So again, easy and obvious means everything's the same color. When the cycle turns against you, it waters down the probability. That means be careful. And if she starts curling down at a 45-degree angle, man, that's a disqualifier. And that's second disqualifier number 2. Okay? Disqualifier number 1 is not trending. Disqualifier number 2, cycle turning color, but at a 45-degree against us. It's like swimming against the tide. No good. All right? All right, so that's the goal. All right, so I was able to show you left click on the DOM, show you how to get into a trade with the trailing stop feature, okay, or with a stop feature on it, okay. That's what Michael's doing a lot of times in the morning. The other way he's doing it, this could be a good example right now. Here's my trend line, right? So the rule is we have to close on the other side of the trend line, right? So here's what he would do. Okay, check this out. If the low is 1346 even, then we know the height has to be 1346.40, right? So here's the winning equation. If you add or subtract 5, add or subtract 5 from then the current high or low, that is the price you click on. So keep the math easy. Okay, here, we'll do it real time. If the low is 1345.70, 1346.10 would be the top. You add or subtract 5, that's where you right click. Okay. Is 1346.20 going to be above the trend line? No. Cancel it. It doesn't qualify. Okay. So again, whatever the high and the low is, add or subtract 5, and that is the exact number you right click on. Okay. That doesn't activate the long until it gets up there. Okay. All right. Enough of that. If it pops up again, I'll go over it. Okay. This one's like watching paint dry right now. Let's go back to the indices. Okay. I said this was a warning flag, right? I zoomed out, said, watch it. Could be some support. We did get a reaction. If you got short on that, you got stopped out. Okay. If you ignored the rules, that's where you got stopped out. Okay. All right. So it's doing it again. So what do we have to do? Draw a trend line. Let's talk about it. Okay. There's the trend line. So let's break this down, right? A few things that stick out. Are we trending? Well, we did make a lower low. It's marginal, but we did make a lower low. Okay. But what I see here is I see a cycle that is flat. It's red, but it's flat. Okay. So another thing to write down, if I were you, Bert says when the slope of the cycle, this is healthy if I wanted to get short. This is healthy if I wanted to get long. See the slope? The same reasons why we wouldn't trade against those, right? This is good for longs. This is good for shorts. Okay. When it's flat, there may be some indecision, and so then we might end up in some chop. Okay. Mark's question, what if the candle only has 2 bars? We don't know where the high and low will be, right? Well, it's then the current high or low. So if we were ignoring all the stuff down here and we were basing off of the trend line, 1, 2, okay? No, we would need a third candle. If it was like this, hold on, like this, right? That's you need 2 candles to connect the dots, right? So it's going to be the third candle that lights the match. Okay, then the high or the low is going to be X, right? And add or subtract from there. Okay. All right. Let's walk away from that. Let's go back to crude. See if that's rocking and rolling. Here's something to talk about too. A lot of questions. I'm not sure if the market's trending. Okay. Here's something that should hit you right in the face. Your dynamic support and resistance. Notice how they're side by side here, like this. Okay. If you're staring at something like this, okay, if you're unsure, okay, because you might say, hey, we made a lower low here, right? Okay, and then we start doing this stuff. Dynamic support and resistance are side by side here, and that's usually an indication you're stuck in chop. All right, so let's take a closer look at this. Zoom out, zoom out. Okay, we did make a lower low here. Okay, but look at now how we're consolidating. Green dots, red, red. They're side by side. Okay, when you see a repeat of that, you really need to be careful. Okay, so take that into consideration. Okay, that's a big one too. Okay, so we're waiting for crude to trend. Go back to our friend natural gas, right? We talked about this one. Man, where were we? Well, maybe we were down here still. It's still trying to try to get back to the BBC. So forget that. All right, let's go into the currencies. Okay, zoom out, zoom out, zoom out. Are we trending? But we were making some higher highs. Okay, inside some consolidation. Right now, I think we're sideways best. Okay, if I look at this, and I'm staring at this thing here, okay, that's pretty bearish to me. Okay, so I think if I were looking, because we are looking still on the long side, right? We had the bullish cross back here. This is no good. Okay, so we want to stay away from the long side, the euro. So let's go right up the Aussie dollar. Sideways, easy and obvious. Double bottom, quadruple top here, dynamic support and resistance, side by side. Mexican peso, dynamic resistance, side by side. Same with the peaks here. Okay, nothing to do unless we get over dynamic resistance levels. Canadian dollar, interesting one. Okay, we had the bullish cross here. This is the first pullback to the BBC. We have bullish divergence here. Okay, the green line is under the blue. A lot of variables here on this one. Again, dynamic support and resistance are side by side. Okay, the green dots and the red dots are side by side. Okay, so it might be in consolidation mode, not so easy and obvious. Okay, Swiss franc. Okay, here's our bullish cross. Here's our pullback to the BBC. Activate the trend line. If I'm trading the Swiss franc, my trend line would look like this. Okay, our eyes gravitate toward the slingshot. Do we have divergence? We have a nice blue slope. So that's good for the home team. But we want our green line to get underneath it here. We want that green line down here. Okay? That would be the separation that Michael is looking for down here. Okay? So, no, it doesn't have bullish divergence. There's separation. Okay? Are we trending? Okay, no, we're stuck in this range here. Sometimes if you're on a single thread like I am, okay, your trend lines get transposed to the other chart. Any quick way to getting rid of all your trend lines, see the select all button. If you left click on it, got a bunch of trend lines drawn, right? You select all, black X highlights, that'll remove them all. Okay, bullish cross in the British pound. Here's the pullback to the BBC. The cycle has a nice blue slope to it. We got a little bit of, it's trying to build some divergence here. Okay, we might be swimming against the tide on this one because we've been stair-stepping down, right? So, not so easy and obvious with that one. The Japanese yen looks a lot like the euro, right? Here's that pullback to the BBC. This is the big fat disqualifier I was talking about. This is no good. Okay, that's that 45-degree angle. We get back to the BBC and we have the up close. We do not want to look at something like this trying to get long. Okay, this is suggesting a cycle reset, which is a market that might do this or consolidate. Okay, which means grief, which means potential stop outs. Okay, so just stand aside. You're gonna be staring at 6, 7 different markets. Okay, there'll be plenty of opportunity. Okay, I'm going to switch back to the ES. Okay, consolidating. As I said earlier, okay, if you're trading the YM, suggested, hey, you know what, go to an 8-tick range chart. It might slow things down for you. Okay, something interesting here. There. Go back to the BBC. We could potentially get an up close here. We're not trending. Okay. But here's the typical Michael thing. The low is 77. There's the close. So what I did is I left clicked. Okay. There's my stop. And it's 16 ticks away. Now, we are not trending, okay? We have a double top here, all right? So again, I'm just giving you an example. You would left click, get long, but on an 8-tick range chart, where our stop now is 16 ticks away, okay? Are we trending? No, okay, we're not. We have a double top in place. I did it because I was able to show the Michael thing where if the low was 77 and you add 8 ticks, right, that would put you at 85. That would also be above the trend line. Okay, that's how Michael becomes proactive. Okay, one and the same. Not only is the close above the trend line, okay, he's able to place the order ahead of time. So the market's giving you grief. Okay, you have the bullish divergence, right, the separation. It's giving you grief because the market's traded sideways. And this is what I see a lot, is someone is spinning their wheels, okay, and this is the trap they fall into. Then it becomes a 50-50 game, okay? So I wouldn't touch it, okay? But that's, again, I did it just to show you, again, how to execute a trade. And a good example of how Mike does it. If you're in the market and you're like, man, I just need to get the heck out of Dodge, exit at market and cancel. It's a great hotkey, okay, because it gets you out of the market, but it also cancels any outstanding orders you have in that market. Okay. NASDAQ on an 8-tick range chart, still sideways. Okay. Mini Russell. Pull back to the BBC. Don't have any bullish separation. Plus, we're trading sideways. Notice how I zoomed out to get that information. This, a little bit different. A bit different than this. Okay. Okay, and back to crude oil. Might be an opportunity here in crude. Look, we got under that support line, right? So that's pretty good. We broke dynamic support. The cycle is red and starting to curl over. So let's see if there's something to do in crude. So we have a potential setup there. It's short crude. Holy moly. Charts and ebooks. And that's my inbox. All right, so let's see if the crude sets back here. So we need a couple candles to draw a trend line. So right now, activate that trend line. Okay, that's left clicking right here. You have DtPro. Zooming out. Okay. Let's see what happens. Okay. So we're waiting for the crude to pull back to the BBC. Okay, and we'll try to get short. Okay, section here. See if the market gravitates toward the green line. As it does now, it'll start creating the divergence or the separation we want. Okay. Takes 2 candles. So waiting for the next candle to form, and then we'll draw a nice fancy trend line. Okay. High is 23. Low should be 19. That's a Michael trade. Get short at 18 on a stop. Disqualified. Oh, these smokes. What did I just do? It didn't fill me. Oh, you know what? I had a stop. There we go. All right. So that closed below the trend line. We have the separation, right? Stop is 8 ticks away. This market's moving pretty fast, so we'll see. We marginally made a lower low here, so I'm not too excited about it, but it is what it is. What I like about it, it's got this slope to it. So the rules are, if it moves 4 ticks in our favor, or it closes on the other side of this MA1, we'll move the stop to break even, or our entry. Where's your stop? It's right here. All right, so here I go. Moving it to 18. What do we expect to happen? The green line to get into the cycle and the market to make a new pivot low, right? Yeah. We're looking for the green line to get into the cycle and make a new pivot low. Right now we have nothing low risk on the table. Get a free look here.
No. Oh, no.
Entry was at 18. We got down to 14. That's 4 ticks in our favor. The stop is right here at our entry. So we'll see. Like I said, what was what was good about this is I liked the slope of that. Okay, that's what I like, slope. And we talked about slope is good, flat, no. Okay, so we're out. Right where we entered. So no harm, no foul. Okay. So there and here, okay, was the entry and exit. Okay. So to kind of cut this up, let me get rid of the markers. Let's talk about it. Are we trending? First thing on our piece of paper, where it says to zoom out. Did we make some lower lows? Yeah, we did. We made some lower lows. Okay. We got underneath that support dot. Also got below that level. So yeah, we were making some lower lows. Marginal lower lows, but lower lows. Okay. We engaged our trend line, right? Because we were looking for the market to do what? Gravitate toward the green line. So we drew the trend line. That's how your trend line should look. Okay. We noted, hey, we have a red cycle. We got a decent slope to it, right? So that was something we could get excited about. Give us some confidence that we could push a button. Okay. A close below the trend line was required to activate that short. Okay. So once we got here, okay, we went inside the down and left clicked. Okay. What I did is I did the proactive approach and right click in advance. I took the high, which was 23. I subtracted 5, and that was the order I placed. So we got short here. Okay, we were able to move the stop to break even. Why? Because it moved down 4 ticks. So we were here, and it moved down to 4 ticks, and the market just stopped us out. It may continue to drop from here, who knows, but we got a free look at it. Those are the rules. A trap that people will fall into is this. Trust me, this is going to happen to you. You will get short. You'll do everything, and you'll move the stop down to your break even. The market might come up, tap you out of that position, and then drop like a rock. The next time, you won't move the stop down. So now your break-even trades become -8s, 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 and then you're going to say, this sucks, it doesn't work, why did I buy this? And what you should be saying is, I'm not following the rules. So remember I said that to you because I've seen that happen over the years. People get frustrated because they get moved stop to break even. Market will go up and tag them and then ultimately go down in the direction they really thought it was supposed to go. Okay. The solution really is just going to follow the rules. Okay. There's no magic pill that's going to cause you to do that. You just have to do it. If you don't, you will you ultimately lose. All right, so it's 2 o'clock. Let's see what the crazy S&P is doing. Crazy S&P is consolidating. Dynamic support and resistance side by side. All right. I'm going to end it. I recorded it. We can review this. If you're brand new, here's your syllabus. I broke it down. We talked about it. So that's a good one to review. Okay. We went inside a market, live markets. Showed you a couple ways how to get into the market, right? You can enter on a left click. Okay. Oops. Let me get rid of that. Sorry, guys. Try that again. You either can left click, get in the market, or you can do as Michael does. You can be proactive, and you might right click, okay, and you would get in above the market, okay. Or what you might do is you might right click in the red and get short on weakness. Okay, that's what he's talking about, what he's doing when he's calling out the highs and the lows. Okay, the other thing is, are we trending? Habit to get into, hit the zoom out button. Okay, good habit to get into. Okay, number two, you're looking for easy and obvious. Okay, when everything is the same color, stacks all the probability in your corner. Okay. Number three, after you get the cross, whether it's a bullish or bearish cross, get in the habit. Okay, bullish cross, bearish cross. Get in the habit of activating the trend line. Start drawing. By the end of the day, you should have a ton of trend lines on your chart. Okay, we talked about that. The reason you do that, number one, we don't know if it'll get back to the BBC or that green line, right? And number two, if the cycle does turn color on you, the trend line is required. All right. So you're putting yourself in a position to take action. Okay, so be proactive in doing that. So if it does, man, it's automatic. You're just pushing buttons here and trying to fumble around with a trend line. Okay, so you need to practice that too, right? Questions pop up: is the ES trending? No, we're side by side here. Okay, dynamic support is side by side. I think if we hit below 28.84.75, then I might get excited about it. Okay, but again, it has to be easy and obvious. Okay. So that's a scoop. All right, so I'm going to shut it down. I'll see you guys in the morning. I'll throw this out on YouTube, and then you guys can review it whenever you guys have time. Okay? We do this every Thursday for an hour. So, you know, when you get a chance, go out there, search CFRN Thursday, and then you'll see all the videos out there. I hammer all the same points over and over and over again. So, those seem to be the things that kind of pop up when I review charts and critique people's work, because they kind of fall into the same traps over and over and over again. I'm just trying to tell you ahead of time to avoid it.